Hey guys, how's it going? Welcome to the London session recap for Wednesday, the 6th of July, 2022. So let's actually take a quick look at the higher time frames as we always should, but it's very, very interesting at the moment because we've now finally broken out of this large monthly range that we've been in for the past 7 years or so. We have now broken below these lows. So it's going to be interesting to see, are we now going to commit to this? Or are we going to get another big sweep of the lows, something similar that we saw here, and potentially see a deeper retrace? Or is this literally going to be, the start of a longer term, or the continuation, let's say, of this overall larger sort of quarterly bearish trend? As there is a lot of fundamental factors that would indicate that would be the case. But yeah, let's see. But there's a long way to go left on this monthly candle, whether or not we'll get a close below, or whether it's going to retrace and sweep. Now you can see I have this little line that says monthly range demand, and that's just because there's no data that goes back far enough on this specific data feed. So forex.com is the data feed of this broker. If you type in euro dollar, you can see here, if you look on the right hand side, that will show you the broker's data feed that they are using. Now IDC, if I'm not mistaken, IDC is essentially like an index of multiple broker feeds, so a composite of those feeds. So in other words, they grab, I think, between 8 and 10 brokers feeds, and they just basically put it all together into one, sort of give you that average. I don't know how exactly they calculate it. But yeah, so if you go in here, you can see I drew these lines the other day for you guys, if you look in the markups. But yeah, essentially you can go there and look at the old data that they've got. The only reason why I don't really use this, or the main reason, is you go on the lower time frames, it's very, very spiky, because they obviously must use some brokers with wide spreads or something that blows this out. So it's very, very hard to read, and it doesn't really resemble what I have in my own broker's data feed, but it's useful for the higher time frames because we can go back. So we're kind of just coming down into this monthly range demand, but obviously this is a absolutely massive zone, about 600 pips or so. So yeah, not paying massive attention to it. Obviously you can refine that down to a single candle as well, but more so just waiting for the lower time frames to signal that price maybe wants to start to turn around and have a bit of a pullback. Obviously you can then go down into a weekly chart as well if you want to refine it a bit more. Okay, you can see we're coming into these sell to buy wicks, and we have a nice pivot zone there, and then the extreme there below. I'll let you guys do that on your own time and add that onto your own charts if you wish to do so. So I'm just going to go back to the actual current data feed, because like I was saying, right, I'm more interested in kind of more focusing on the recent PA that will occur, more so than where we're necessarily potentially coming into. So we've broken that level, major monthly level. The monthly's bearish, the weekly's bearish, daily's bearish, the 4 hours bearish, the M15's all bearish. But what do we know? After breaks of structure, we can expect those pullbacks. But obviously, as they are higher time frame breaks of structure, it doesn't necessarily mean just because we've broken that low, suddenly we're going to get that initial pullback, right? It can fall for a pretty damn long time before we may see that pullback, right? So it could fall hundreds of pips before we see that. Dropping down to the daily chart, just ignore these annotations. But yeah, very simply, we now have a new daily swing range, where this is our daily high, but we could, like I said, fall for a number of days, maybe only even get a little bit of a pause and continue down, or who knows, maybe we'll come into this level, get a daily change of character, and then we could expect to pull back straight away, or maybe even get that aggressive retrace. But the lower time frames will help us with that. What the point I'm trying to more make here is that don't instantly just go, okay, well, we have to start looking for longs now to try and play that daily pullback. That's going to take a while for that to happen, right? We'll see the M15 start to shift bullish. You start to see a lot more stronger and sustained bullish attention on the lower time frame before you want to start trying to have those longer term targets for those pullbacks, right? So for now, you can continue to follow those lower time frame, bearish order flow, for some time. We do have a daily zone from here, but like I said, I don't pay massive attention to those super old zones. Okay, so for our chart, pretty much the exact same analysis as daily chart in terms of what I'm expecting. Just going to keep following this momentum. It's a bit tricky because sometimes price can literally keep tanking and going for a number of days. You can get very short pauses in the market like this, like we saw sort of yesterday. Sometimes you can see a little bit more sustained for a day or two, and then just continues tanking again. Whereas other times it can do this, and then it can literally get a change of character, and it can instantly start getting an aggressive retrace. So the way I kind of approach this is I'm happy to just continue to keep following that bearish order flow and kind of selling at, let's say, poorly priced areas, but I'm just going to be a bit more aggressive with my targets, right? I.e. when we get those pullbacks, looking to get involved, but then just literally targeting these lows and getting out and just continuing to follow these small ranges. And then once we get that first sort of bullish change of character, okay, happy to again play these longs, but I'm not necessarily expecting a deep pullback right to premium. It's probably going to be short-lived, get another bearish change of character, and then get another continuation of that momentum. So yeah, it can be a bit tricky because you don't know if it's going to keep going or if we're going to get those sharp pullbacks, but that's why I'm going to keep trading it, especially, utilizing that knowledge of internal structure that we now have, following that order flow, but just being a bit more in and out with your targets there. But yeah, what I would say to the majority of you is just keep focusing and following these shorts until we get some, serious bullish intentions stepping into the market. Stick to the momentum to the downside, stick to those easy trades. So then when we look at, say, the M15, just going to switch windows here. Coming into the London session this morning, price was around here, okay? So this for me would be the current swing structure. Some of you may have that as your swing pullback. That's cool. I more view that as kind of just an internal pullback, when we look at it relevant to the structure we've previously had. But when you have such a sharp, massive sell-off, there's no way I'm really thinking price is going to pull back up to here. So this is when you can then zoom in a little bit and almost in the back of your mind, view this as your sort of, likely swing structure. It's likely price is not going to pull back up to break that internal high, right? I'm happy to kind of zoom into this range and look for shorts to try and get that next leg to the downside and just look to target this weak low from within here, right? So you can zoom in a little bit when you have these current market conditions. So let's do a bit of bar replays. I think it might be a little bit easier to explain because it wasn't the sort of simplest of price action, let's say, that we can go through. So had a pre-Frankfurt, we had pulled back during Asia into sort of this very average area of supply. We ranged for a bit. We had, let me go back even further, right? We had a pretty decent bullish change of character, and by decent I just simply mean nice bit of momentum came in. There might be some demand here from the left, but again, nothing that I really care about. So what does a bullish change of character signify to us? Well, we know that a chock just signifies that we're getting an internal pullback, right? So that signals that we may get a movement up and towards this strong internal high, and then we'd look for a bearish change of character or a small IBOS, right, to then signal that larger internal pullback is now finished, and now we're ready to target that weak internal and swing low. So as soon as we kind of come up into this level, sweep these highs here, and then we have a bearish change of character, that can be a decent signal that that internal pullback is now over, and now we are ready to take out this low, right? So that's kind of what my thought process would be. I'm aware that there is demand here that caused that bullish change of character, and this is where it gets a bit tricky, because do you want to be buying from a weak swing and weak internal low? Typically no, but when you are that oversold and there is that potential to have those larger pullbacks, very often, not very often, but I've seen plenty of times where price then would come into this low, and then you can look to trade from here. But ideally what you want to see is at least an M15 change of character, just to give you a bit more confidence or confirmation that this low is going to hold, and then you can play that movement to the upside. Because if we've had this internal pullback and we think that internal pullback is now finished and that internal lower high has formed, right, that should continue to the downside until it gets taken out. But if price comes into this level and then gives us that bullish change of character, then that's a pretty good signal that these highs are now weak, and we would expect that structure to continue and to hold those small bullish ranges until it takes out that high. Unless it comes up into this level here and then gives us a bearish M15 chock, right? And then if that happens, then it confirms that level is going to hold, and then we would expect these lows to go. So that's kind of how you can play it. But obviously when we're playing with reasonably tight ranges, it's not always going to give you a change of character to get involved, right? So let's place price forward a little bit and see if we can explain what I mean a little bit better. So we're coming to this level. At this point, I'm not really interested in wanting to buy from this. Like I said, at minimum, I'd really kind of want to see an M15 change of character. So it's a bit harder to see with bar replay here, but the order in which this happened is price came in like this, right? Then it took the low. So as it takes that low, our new fractal high is this point here, right? Because as price breaks that low, the last candle to fail to break the prior candle's low was this one, right? Because we have a down movement, an up movement, a down movement, an up movement, and then it takes the low. So as it takes the low, this becomes our new fractal high. Pricing comes up in that same candle and then takes the high, right? So that is our bullish change of character, essentially confirming that this extreme weak demand may be holding. So put on the chalk there, right? So now at this point, what do we have? Well, we've got a bit more bullish confidence. This is still obviously a bit more aggressive. You are trying to trade heavily counter trend, but this is one way, in which you can do it. So it's also the nature in which it happens, the timing. These are all things you kind of have to take in on board, right? Which is kind of bringing in that element of human, not discretion, but that human judgment into it, because we've come into this level. All right, we've aggressively swept that low in one candle, and boom, Frankfurt open, European volume starting to kick in, grabbed the orders below there, filled up some more orders in. Sorry, brain is melting there. We've swept the liquidity behind that low, picked up some more demand, right, within this extreme level of demand, and aggressively moved to the upside, giving us a bullish change of character, which can signal now that these highs are weak, because they failed to take out that low. So now potentially we could expect this fractal structure to hold bullish until it takes out these weak highs, unless price comes into this demand level, gives us a bullish change of character to realign itself with the larger internal structure, to then want to come out and take out those lows, right? So what you can do, again, this is a bit more aggressive, this is a bit more advanced, is you now have the M15 demands that cause that bullish chalk. So you could look to get long from within here to target these weak highs, or at least take heavy partials at this level here, in case, overall that does hold and then we sell off, right? Because clearly the overall overwhelming trend, larger trend and momentum is to the downside. Okay. So at this point here, we can drop down to the M1 and potentially look for some entries from within here. Now there's nothing that clear in terms of M1 candles in which you could enter from. Obviously you've got the extreme, but it's just a little bit, kind of messy. It's sort of corrective. It's already been tapped into a couple of times, but that would be one level. The next sort of clear unmitigated level would be this, excuse me, M1 zone, which flipped this level here and then caused the M15 chalk. Problem with this is that, one, this is already an aggressive setup, so I kind of want to have the clearest high probability M1 POI to be entering on. There's no inducement in this leg, right? There's no structural liquidity. Usually you want to see a little bit of a pullback, so that when price comes in, it can use that low, right, as liquidity for the POI, as inducement. And also this didn't sweep anything, right? It's just a movement in, a little pullback and a movement to the upside. So typically these zones don't have a very high strike rate of holding. So when you have something like that, you want to see price come into it, give you a bullish chalk or a bullish eye chalk, just as a bit more extra confirmation, and then you can look for that movement there to target the supply or potentially try and run that weak high, right? So this would not be something I would set my order on personally, especially as the overall setup in terms of the high time frames is pretty aggressive. So price pushes up, pulls back down into this level, mitigates the M1 zone, and then gives you your bullish change of character here in the M1, where if you really liked it, this is where, again, you could then use that as your confirmation entry. So you'd be looking to enter from within this level. But yeah, price never pulls back. It just mitigates essentially the range, right? The sell to buy range that causes that change of character and then pushes up to the upside. So at this point now you're in M15 supply. So I wouldn't be looking for longs anymore. Now this is where it gets a bit tricky, because if we go back to the M15, do you want to sell from this level? Now I personally was still open to looking for sells, even though I know it's lower probability. Why am I saying it's lower probability? Well, because we had that internal pullback. We took an attempt at trying to take out that low, that weak internal and swing low. We failed to do so. But more importantly as well, it then gave us a bullish chalk, right? So then you would expect that to hold, that fractal bullish structure to hold, to take out these weak highs. Unless price comes in, ideally would then give us a bearish chalk to reconfirm that level, right? Then this has failed to do its job. It's failed to take out the high. And then you would expect that small structure to hold bearish until it takes out those lows, right? So if you wanted to short from this level, that would be the most ideal thing to wait for a bearish M15 chalk, for the fractal structure to realign with the internal structure. But like I was saying earlier, when we have such a tight range to work with, you're not always going to get that. So it's up to you and how much confidence you want to wait for. For me personally, I was open to looking for an M1 confirmation entry from this level, kind of just trying to be aggressive and continuing to follow this momentum. It wouldn't be the highest probability in the setup in the world, for the reasons I explained, because at this point, we can say that these highs are potentially weak. It's just that I've seen plenty of examples where the overall supply chain would hold. This is just a short-term bounce to come into here, and then it sells off anyway. So it's up to you how much confidence you want to wait for, because there's a lot of confidence at this point, or a lot of logic to say that these highs are going to get run. Right, we've built all of this liquidity up through Asia. We've had a decent driver taking out the low. We've got a bullish change of character. We've got a lot of momentum coming up to the upside. We've had that sweep of liquidity. This is where you may just want to be patient and wait for those highs to go there. Okay. So I'll play this forward because on the M1 it doesn't set up, it literally just stays bullish. There's no bearish M1 change of character. So at this point we then come up into this level. So I was looking at sort of both of these POIs, this level here and this level here. Now with the benefit of hindsight we can see it's already mitigated, but yeah, if price had to continue to push up through this zone, I would have been happy to look for shorts from within here, right, or anywhere from really within this range, right, if we got the necessary confluences that we wanted to see. Just reined it in because price ends up not mitigating anywhere from here, and we can see that we had this movement down, pull back in to mitigate those orders and push down, right? So it makes sense that price didn't come up to this high, and it just wanted to mitigate this unmitigated level and use all of this as inducement. Cool. Now at this point here, what has happened? Well, we've had that break up. We've now taken out all of this supply, right? So I'm just going to delete all this to try and keep the charts nice and clear, which makes sense, right? We wouldn't be too surprised at this point that that has happened. Okay, so this is where for me it gets a little bit tricky, because we've had at this point, right, a sweep of the highs. We failed to close above these highs here, so we haven't had a bullish internal break of structure. So this is where you have to think about sort of the two levels of internal. We have this larger internal structure here. Okay, so we're trading between this high and this low. So when I say a bullish IBOS, I'm talking about this level here, right, where essentially you'd be looking at the smaller structure within here where you get a bullish break, and then you'd be looking at that up into this level, and then you'd be looking at that level, right? Because let's say the candle had a closed above here, I would just be looking at this as like the smaller internal structure within the larger internal structure, right? If we got a closure above. So if that would basically be a lot more bullish for me, because imagine we closed above these highs here, then I would expect this to be a small internal low, right, a strong internal low, and then I'd expect that to hold until it mitigates the level within here, and then once we get that small bearish IBOS to realign itself with the larger internal structure, right? Hopefully guys that makes sense. Yeah, so I'm just going to delete these. So again, I don't know if I explained it very well, but we have this larger internal range with here. Let's use colors, that might make it easier to explain. And then if we use, let's say green, right, then I would look at this as a pullback, that as a break if we close above it. So then if you're looking for shorts from within here, which are valid because you can try and target that next break of the swing low, I would view that as that small green strong internal low. So you would be wary of taking shorts as it comes into this level. You'd want to be taking profits if you're in any short orders, and potentially looking for a long from within here, right, to then target that weak small internal high. I would expect that to hold potentially until it comes into a level from within here, and then when you get that bearish green IBOS of the smaller structure, then it's now realigned itself with the larger orange structure, and then that's when we could expect these green levels to hold to target that low, right? So essentially that would be your larger orange structure then playing out, because you have the swing pullback to come up into here, then the green structure realigns itself with the orange structure to then get that next low. So if you're new, don't worry, because this is all covered in the advanced structure module, but for you guys who are kind of with that, hopefully that makes sense. But because we tapped into here and we failed to have a close, that adds to the confluence, right? We haven't had a bullish IBOS. This is just a sweep of those highs into sort of that premium internal supply level. So now we can look for shorts. So as we come into that level, there was a refined M1 zone as well here, which we can see. Nice clear M1 zone. So what do we need? Well, at bare minimum, if I'm looking for a confirmation entry of that level, I need to see a bearish M1 change of character, which would be here, and also ideally we want to see this M1 demand holding. So I'll draw it exactly kind of how I had it as we're going through the live market. So nice big sweep, nice big wick reactions, but I need to see demand fail and us get a bearish change of character, which we now have. Okay, so at this point I've seen basically everything I want to see to get short. So where do I set my limit order? Well, there's kind of a few supply zones. We have the very extreme, which would be this wick, and this is, when price action is quite messy and volatile. It's kind of hard for me to pick a POI sometimes. So I kind of view that wick as mitigated, but ideally I'd like to cover it with my stop loss, but it's not great. We have the this level here, right? We have this candle, but you can see if I bring it back, This is again where it gets a little bit tricky. Where's the replay sign? At this point, that supply level is created. Obviously, it's not strong until it breaks structure or flips demand. But at this point, that's how you would draw it. That's how your supply zone is created, right? It's a bullish candle engulfed by a bearish candle. Then the next candle pulls into that supply zone, fills those orders, and then pushes down. So that essentially is mitigated, right? And then what do we get from here? We get another pullback here, down movement, an up movement, and a down movement, giving you another supply zone. Now this one again isn't great because we already spiked through, right? Even though it's by barely a micro pip, technically we've spiked through, so that's not actually a flip because we've spiked through, then pulled back. So arguably, you're flipping, demand within this level. I don't even, was that already mitigated? What's the high of that? High of that is 642. The low of that is 642. Right, so that's mitigated. So technically, this isn't really flipping anything because we pushed straight through. Whereas you want to see it come in, then react, then push down, right? So that wasn't really a zone I liked, but on the 30-second it kind of clear. So that could have been, somewhere potentially you could have set an order from if you're kind of just trying to aggressively follow the momentum, right? If we look at the 30-second, you'll see what I mean. Okay, you see how we have a bit of a pullback, and that's kind of somewhere you could look for an entry from. Now, typically when I'm kind of trying to get another decisional like that, that's quite aggressive. It didn't obviously sweep, it doesn't have any inducement. I want to get tagged in straight away. So at this point, you'd either want to wait for price to pull back in and enter at market or quickly set your limit order. I want to be tagged in like this and then it continues, because otherwise if you come in and then you get kind of that true M1 pullback, you don't want to be setting your order limit there and then getting pulled back in. That's when I don't like it. I want to get tagged in straight away and kind of get in as part of this movement here. Hopefully that makes sense. If I'm going to take a very sort of aggressive and nondescript zone like that, which is what happened, okay? I just didn't set an order in this case. I didn't like it, but that's the type of entry. If you did, you want to be getting in almost straight away, and then when it moves down, hopefully you can remove your risk pretty quickly as possible, because then this is what can happen, right? Then it comes down into this prior sort of demand range, right? Because obviously what can be happening is this could be happening. This is something I was quite wary of, is you coming into this level, right, to then continue that sort of M15 internal pullback. So this is why, if you're not already in a kind of rubbish zone like here, this is where I'd not be leaving my limit order on a decisional that, one, it isn't even a true flip because price pushed straight through. There's no inducement, it didn't sweep. It's just buy to sell wicks. You have all of this above it. That's when I would not leave the order on unless you were already in, right? That's the type of one where you want to be aggressive, because you're kind of just trying to follow that momentum, which we saw in a 30-second, right? You're just getting into that 30-second pullback to try and capture that leg. Whereas now, this is not the type of level I'd be setting a limit order on whatsoever. We also have, this is kind of your other unmitigated POI as well, because you have these buy to sell wicks here. If you count that wick as mitigated, then you've got this one as mitigated. Okay, so these kind of be the two levels you could look at, even though, we can see that was already mitigated level there. So I deleted that, and that's kind of the only POI really I was interested in. In terms of the flip, I would have the larger range drawn on like that, and you can see that's a much clearer M1 price action, right? I'm not a big fan of kind of just price pushing straight through in these wicks. You want to see actual kind of movements on the M1, right? So what do we have? We have price come up, it comes down into that range demand, it fails to put in a higher high, and then it pushes down, right? But that's where I kind of viewed that as already mitigated, because price came down, pulled back into there, and went down. So for me, this made the most sense. But again, it's not something I would have that confidence to set a limit order on personally, just because price could come up and mitigate something within this wick, it could mitigate something within this wick. It was all just looking very messy to me. Also, like I said, I wasn't sure if this was going to be the movement, right? And we were coming down into here to then push up higher, because it wasn't looking that clear on the M15. Arguably you could say that there's M15 demand here, right? Refining to this wick and building a bit of a demand chain. But I wasn't confident in that either. Like, I didn't think that was going to play out simply because we failed to close above. There's just good kind of little arguments I can make for bullish or bearish cases. And when it's like that and I'm not sure, no need to get involved, right? Just sit in your hands and let it play out, or wait for more confirmation in that case, right? So I'm not too bothered. Letting price play out, and thought, okay, maybe it is going to play off that 30-second zone in the end, right? Where we had this level here. But again, not for me, not interested, not that bothered, right? So just not really paying too much attention to price at this point, and then we pushed up, because what I thought might happen is I was thinking I had this level down here, this unmitigated level, potentially price might come into this, right? And then we might then push up higher. So then thinking, okay, maybe price is going to come into this level, right? We never got a bullish change of character. So essentially we're just having that one movement down. Potentially we're coming into this level to then get that movement there. But I didn't, like I said, have confidence to set a limit order on that. So just wait to see if an M1 CE can come from this level. So then we spike up through that zone, okay? And then we get an aggressive reaction from away, right? And then we push down. So at this point I'm thinking, okay, it looks like there's a lot of momentum. We've come up into the extreme. Now we're pushing down from this level. So potentially we are just reacting from this unmitigated wick from within here. And then it gives me a confirmation that that level may be holding, okay? So now this is when I had more confidence to want to set a limit order on. Now, I still didn't really like this because we had this massive wick, right? Price action is messy. And very typically when it's like this, I just won't get involved because I'm not sure. Is it going to react from here? Is it going to react from here? I don't know. But this is kind of similar to what I was saying here. When you have a decisional and potentially extreme, I'm happy to set kind of a limit on that decisional if I can get in almost instantly. Whereas if it came like down here and then it was coming back up, that's where I wouldn't want to set a limit order on something like this, right? It didn't sweep. It's all a bit messy, I'm not sure. But if I can get almost in instantly, like because it's almost, you're trying to play that like 30-second price action, right? And then when it comes down to here, I can remove my risk, then I'm happy to get involved. So that's essentially how I saw that. Quickly set a limit order. Price came in and tapped the distal, but because I used a 2-pip stop, it literally missed me by, I think, a micro pip or two. Okay, and then yeah, at this point it's continuing to play down. Now as we're coming into these lows and stuff, that's where your risk would be removed. If you pass short 4R or whatever, it's a decent amount of momentum where you can then, or it's moved a decent amount of R where you could then look to remove your risk depending on your management. Then this is what I mean, right? If you went tagged in here and now price is pulling back up, do I want to be setting a limit order on these levels? Not really, especially as it's kind of failing to break these lows as well. And this is where I'm just done. I don't like what's going on. It's all a bit messy. It's all quite hard to read. That's it. My session was pretty much done at this point. I don't want to get involved. Like I can see, is this level going to hold? Like I'm saying, right, are we going to get this continued sort of bullish order flow? I couldn't really make much sense of it. It was very indecisive. So yeah, so none of this is that great, to be honest. That probably wouldn't have been the best trade for me to take. But I kind of just wanted to chase that momentum to see, after that sweep, was that going to be the movement, right? Confirmation. So big sweep, we come down, we come into that extreme, right? It then gives us our confirmation. I'm just trying to get in here in case that's the pullback to then continue that movement. But yeah, once I didn't get it from within here, that's just when I left this alone. So to be honest with you, probably the best training would have been to stay out of all of this and just wait for much clearer intentions. It's really horrible, messy price action. We can see it kind of just messed around at this point, swept those highs, and yeah, there's just nothing here where I can get involved. And then coming towards the end of the session, we then broke those lows, and that brings us to where we are. So yeah, if you're a bit new or new to the style, don't worry if that seems a bit overwhelming, because this was pretty horrible price action, to be honest. I would say the main lessons I'd want you to concentrate from is kind of, reading the M15. That's always going to be the best case, because it's the POIs that matters. That's what we're trying to trade from and know what direction we want to be going in. The M1 entry model, it depends on how aggressive you want to be. It's going to depend on really how much you like the M15 price action. And for me, initially when we came down, I wasn't really interested in looking to take a long from here, but when you get that kind of price action, we get a sweep on FF Open with that momentum, with that volume, with a bullish change of character, you can look for a long from within here. Is that the highest probability position in the world? Not really, because you're trading against the large internal structure, against all the bearish structure. You're trying to catch a falling knife at that point, so that would be very, very, very aggressive. But more so, it's how you can use that information to know, do you want to be trading from these highs at the moment? And that's a pretty solid framework to say, no, these highs are now weak because they failed to take out the low. We've then had a bullish change of character, so now we'd expect that to hold until it takes out those highs, right? So maybe at this point you want to say, okay, I'm only going to short from here if we get a bearish M15 chock. That would then save you from those losses. Or there was no M1 CE in there from anyway, but that's why you then expect these highs to go, which is then what happens, right? Breaks these highs, fails to close above, spikes this zone up here. Okay, now we have a lot more confluence on the M1 to try and look for that short, but obviously as we just went through, it was very, very horrible and messy price action. And also I wasn't too sure myself, right, whether that was going to be the pullback sort of into this continued demand chain to then continue up higher. It was all pretty messy at that point. So not the easiest of sessions to trade whatsoever, but yeah, that was my view on price action and kind of how I saw it. So now we've had an M15 boss, get rid of some of this levels here, let's clean it up, had a sweep of liquidity, mitigated that level here, so just going to clean some of this up here, Okay, that can be our swing low, M15 swing, and then an M15 high there. Okay, so we know the new range we are playing within. Drawing these extreme supply zones. Okay, so again, a little bit messy, but try and include those wicks there. You can even just include that whole count if you want, more of that buy to sell range. And then we are just setting off. So yeah, definitely not really interested in longs at this point. Just going to keep focusing on those shorts. It's just a bit tricky when prices like this, like I was saying at the start, how we don't know if momentum's going to keep being strong, right? Where we can just be very aggressive and just literally follow any little pullback to a POI, or if we're going to start to get those aggressive pullbacks and potentially even switch bullish at some point. It's going to be dependent really on your overall risk tolerance. Like this, none of this is really that clean, right? That would kind of be the only POI that I could immediately see. But yeah, if you're going to take these sort of aggressive shorts that, let's say, are not well priced, then my advice would always be to take the majority, if not all of your volume, at the most recent sort of week structure, because obviously if you could get in a nice short here and you could go, okay, you're trying to swing like this for that movement there, but then it can just take that low, right? And then we can get a bit more of an aggressive pullback, and your stop loss is not well priced to be protected at this point. Sometimes this can be in top of environment where you may want to utilize the M5 a little bit more, just to kind of look to see if there's any POIs that you can look for price to pull back in there. But yeah, just sort of be wary, with these stages. We have a bit more sort of 4-hour supply now as well to give a bit more confluence, to those levels. So hopefully you took some value from that. Not the easiest of sort of sessions and price action to break down, especially if you're a bit new to this. But yeah, cheers guys. If you're trading in New York, have a good one, and I'll see you in the next one. Cheers.